Topic 1. Summary, 3 to 4 lines. Escalating military tensions in the Gulf, including attacks on UAE oil hubs and strikes involving Karg Island, have pushed Brent oil above $100 and raised fears of supply chain disruption. Markets saw retail-driven oil meme flows into oil-linked ETFs, while governments consider U.S. strikes and releases from strategic reserves to calm prices. The situation threatens air and shipping routes and could disrupt global pharmaceutical supply chains that rely on petroleum-derived inputs. Detailed report. Escalating tensions and military strikes. After U.S. and Israeli strikes on Iran, Iran's retaliatory actions and related use of force have sharply increased military tension across the Gulf region and the Strait of Hormuz. The U.S. struck Iranian military facilities on Karg Island, holding off attacks on oil facilities initially, while the Trump administration has warned it could target Karg's oil infrastructure if needed. Those threats raise the risk of further retaliatory strikes against regional energy assets. Strait of Hormuz situation. The Strait of Hormuz is a key global oil transit choke point. Normally, around 20% of seaborne oil passes through. Commercial ship traffic has fallen substantially, but Iran continues to export substantial volumes via its own tankers. Recent estimates from analysts put this at millions of barrels per week. U.S. Treasury officials said allowing some Iranian tankers to transit has helped global supplies. The U.S. and allies are discussing measures such as convoying merchant vessels and other protective steps. Price spike and market response. Geopolitical risk sent oil sharply higher, with Brent breaking into triple digits and trading in the roughly $100 to $105 range. The IEA estimated supply disruptions could amount to millions of barrels per day, and coordinated releases of strategic stocks are underway. Major countries are drawing on global inventories of roughly 400 million barrels. The U.S. announced a release of about 172 million barrels from its strategic petroleum reserve. Financial and investment dynamics. Retail and small investors piled into oil-linked ETFs, for example USO, creating an oil meme. Trade with record daily inflows measured in hundreds of millions of dollars. That surge is raising concerns about heightened volatility and speculative distortions in energy markets. Aviation and logistics impacts. Drone strikes on fuel tanks near Dubai briefly forced a restriction of operations at Dubai International Airport, causing cancellations and delays. The incident highlighted airport security vulnerabilities and created immediate supply chain disruptions for fuel and logistics. Supply chain and drug impacts. A blockade or major disruption in the Strait of Hormuz would impede crude and petrochemical flows used to make pharmaceutical inputs. A significant share of U.S. generic prescriptions depends on ingredients produced in India. India imports a substantial portion of its crude via the strait and uses petroleum-derived intermediates to make drug precursors. Analysts warn that shortages or transport bottlenecks for glycerin, phenol-derived components, and refrigerated container delays could produce visible delays or stockouts in high-frequency prescriptions for blood pressure, diabetes, statins, antibiotics within 4 to 6 weeks. Though many manufacturers and distributors report 30 to 60 days of inventory and say supplies are stable for now, prolonged disruption could cause price rises and broader shortages. Summary assessment. Military threats around the Strait of Hormuz and Karg, combined with drone attacks, have already driven oil prices and speculative flows higher, and risk feeding through to real economy supply chains, including pharmaceuticals. Governments are exploring energy replacements, naval escorts, and reserve releases to soften the short-term shock, but a deterioration could produce broad effects on supply, prices, and public health via impacts on generic drug supply. Topic 2. Summary, 3 to 4 lines. Severe,